Disclaimer: stock trading is inherently risky and the users agree to assume complete and full responsibility for the outcomes of all trading decisions that they make, including but not limited to loss of capital. Matthew, chapter 25 verse 14-30, "For it will be like a man going on a journey, who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money." How to use vortex indicator and what is volume to conviction. What is vortex indicator? A vortex indicator, also known as a V, is an indicator that is made up of 2 lines: an uptrend line, also known as V+, and a downtrend line, also known as V. Typically, these lines will be colored green on the left and red on the right. It is possible to identify potential trend reversals and validate existing trends with the use of a vortex indicator. Acquiring knowledge of the vortex indicator, V. Etienne Boats and Douglas Siepman are credited with being the creators of the vortex indicator. They initially presented the notion of the indicator in a 2009 edition of Technical Analysis of Stocks and Commodities. The vortex indicator is derived from the intersection of 2 trend lines called V+ and V. How does the vortex indicator work? The vortex indicator connects the highs of a market's price bars with the lows of the next price bar. At the same time, the lows of a market's price bars are connected to the highs of the subsequent price bar. The 2 indicator lines provide valuable information on trends in the price of a stock. Is vortex a good indicator? The vortex indicator is a relatively complex indicator that is not very common among retail traders. The indicator has 2 lines, oscillators, that capture positive and negative trend movements in the market. The indicator is not installed by default in most trading platforms like the MetaTrader. Inferences. The vortex indicator is commonly used in conjunction with other reversal trend patterns to help support a reversal signal. It is integrated into most technical analysis software programs. V+ and V are typically graphed independently below a candlestick chart. The chart below provides an example with lines that indicate changing trend signals on a candlestick chart. What is volume and conviction? A specific financial asset's trading volume is a measurement of how much of that asset has changed hands over a certain period of time. When discussing stock prices, volume refers to the total number of shares that are traded. In futures and options trading, volume refers to the number of contracts that have been bought and sold. Traders pay attention to volume as a means of gauging the market's liquidity and use variations in volume in conjunction with technical indicators to make trading choices. Examining volume patterns over a period of time may help one obtain a better understanding of the level of conviction that is driving price increases or decreases in certain companies as well as whole markets. The same is true for traders in options, since the volume of trading is a measure of how much interest there is in a particular option right now. In point of fact, volume is an essential component of technical analysis, and it is prominently featured among a number of crucial technical indicators. What is trading conviction? Conviction is defined as a firmly held belief or opinion. In the trading world, you will often hear traders say, "That was a conviction trade." Conviction trades are ones taken with large size, and are often responsible for the bulk of your P&L at the end of the year. One of the most important characteristics of great traders is sizing big when the odds are in their favor. Not sizing big on your high-probability setups is like betting small when you have pocket aces in Texas Hold'em. You won't be able to win in the long run if you don't maximize profits on your high-probability setups. Capitalizing on winning trades is just as important as keeping losing trades small. Volume equals conviction. When combined with decreased volume, higher stock prices indicate that it is very probable that the higher prices will not be maintained. When stock prices go up with an increase in trading volume, this almost always indicates that the higher prices are justified and that they will most likely continue to go up. The same product, but at a reduced cost. If there is a lesser volume, yet the prices are lowered, this indicates that the lower prices cannot be maintained, and so on.
That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also follow us on our Facebook page to learn more about the stock market.